Good afternoon, everyone, and welcome to Stock Market Today. It's Alyssa Corum and Ken Shreve here. We're going to break down the action for the major indexes. Tech continuing to lag, but there are bright spots elsewhere, and we're going to break down a couple of those names today, Ken.
Yeah, so many stocks in the mining group acting well. We've been talking a lot about them on IBD Live, but today let's take a look at Teck Resources, Camco, which is a uranium miner, and we'll go outside the mining group and take a look at General Motors, which found support today after a pretty good earnings report.
All right, that we will. First, a look at how the broad market did today. This is QQQ, the ETF that tracks the NASDAQ 100, down about 0.4% today, Ken, along with the NASDAQ composite. The Dow outperformed up about 0.3%. The S&P roughly flat, slightly higher, and the Russell 2000 down about 0.5%. So the continuing theme here after the pretty nasty day that we saw yesterday, in particular for the NASDAQ, more weakness today.
Yeah, very disappointing. I think the market is telling us right now that the NASDAQ and technology stocks is not where you need to be. Even when you look at the QQQ here, when it hit that high of 338.19, it yeah, just go back to the daily there, and then you see where it hit that high of 338.19. It came down in very heavy volume, lots of institutional selling when it came off its highs, and then it rallied back towards the 340 level in very light volume, and now you're seeing signs of distribution again in the index. So we had a decent close yesterday for the Q, came down close to its 50-day moving average, closed well off lows, so it would have been reasonable to expect some follow-on buying in the index today. We had it for a little while, but again, late in the session, not able to hold gains. Volume very light today compared to what we saw Tuesday, but overall a disappointing performance for the NASDAQ again.
That's right. I thought you were going to talk about the strong start that we had today. It was a bit encouraging.
Yeah,
that
definitely
didn't last very long.
No.
Kind of closed, filled that gap not too long after those opening couple of minutes there, opening half hour to hour.
Yeah,
or so.
just not seeing any upside volume in the Nasdaq, and that's a concern. It still looks like an index that's showing more signs of distribution than accumulation at this point, which is a potential problem.
Well, you mentioned tech not being a place where you want to be, TECH that is, but what about TECK? So let's check in on that chart here. In the mining group, which you mentioned, we've been talking about a lot of strength here among these stocks. The mining metal ores group ranked 21 out of the 197 groups IBD tracks, and very strong volume here today, Ken, again of about 7.4%. Some heavy volume, the highest upside volume in quite a while here. And this action comes just a couple of days after the quarterly earnings report, which showed some really strong bottom line growth.
Yeah, I mean, this is a very nice technical setup here. There's a pretty easily identifiable pivot point of 2282. You can see that that recent high, and strong volume in Teck Resources today as it breaks out over the 2292 level. Now, when you look at the weekly chart, this is an example where even though the stock is probably a little bit extended past the 5% buy zone from the 2292 entry, you look at the weekly chart here, and MarketSmith is sort of recognizing a consolidation, and it really doesn't look too extended to me. So I think starting a small position here is still fine. The strength in this mining group has really been exceptional. A lot of the strongest price performers in the market now are these turnaround stories, and Teck Resources is certainly one. You can see when they just reported Q1 results. After several quarters in a row of declining earnings and sales, we got a pickup in top line and bottom line growth. So like the technicals here, bullish move today, and miners continue to be where the money's flowing right now in the market.
Most definitely. And same for uranium plays. CCJ had a standout session day before yesterday. Big move off of its 50-day line, continued its gains today. So up strongly for the week here, Ken, up about 13% and above average turnover. And look at that relative strength line hitting a new high as this company heads into earnings.
Yeah, this is a particular sign of strength when you have the weekly chart showing a relative strength line in new high ground. You can see technically Camco has not broken out yet from this shallow cut base. So, yeah, it's a uranium miner. There were reports today that the Biden administration is considering subsidies for some of these uranium companies, and so that kind of fueled buying in the uranium space. But this is a nice looking chart here as well. I like that relative strength line in new high ground, and yeah, we have earnings coming up, so we'll have to see what the results look like.
So yeah, it seems like if you wanted to play this one as it retook that 50-day line, you could have potentially risky there given how close it was at the time to earnings. Now, of course, the earnings report pretty imminent here. So we want to wait for that report to come out to see what the reaction's like.
Yeah, and this one also could make sense as an option trade if you think the results are going to be good. I was checking the premium here for a 19 strike price, not this Friday expiration, but the following Friday expiration, and it was about a little over 4%. So it was a pretty reasonably priced call option trade. I think the premium was less than $1, around 85 cents for the right to buy 100 shares of Camco at 19. So for an option trade, it didn't look too bad, really.
All right, compelling strategy there. And we also want to quickly touch on GM before we go, reacting positively to its quarterly report, up 4% on the day. Heavy volume here as well, fighting to hold above that 50-day line, but it sure is looking a lot better than industry group peer Ford, which, I feel like these two stocks earlier in the year were moving quite in tandem, but moving in opposite ways on their earnings reports. Ford gapping down pretty severely after its report, and GM holding up better.
Yeah, last week, and investors were spooked when Ford said that their second quarter vehicle production was
Yeah.
literally going to be cut in half by this chip shortage.
Mhm.
General Motors acknowledged a chip shortage as well, but not only did they beat it was a big earnings beat for Q1, but they also for the full year their EBITDA guidance of 10 to 11 billion, they actually guided towards the high end of that. So despite maybe some earnings headwinds in Q2, they still stuck to a pretty bullish EBITDA guidance for the full year. So I think the market liked that. General Motors has a little easier than Ford at this point. Ford, their most profitable vehicle is their F-150 pickup, and they had to close a couple of F-150 plants that really hurt production there. General Motors, not so much. I mean, their pickups and their SUVs are doing pretty well. So they're suffering from supply constraints, but I don't think as bad as Ford. And good to see the stock back above its 50-day today, strong volume. So I think people with earnings out of the way. I mean, this may be an aggressive entry here. Maybe put a stop below yesterday's low, but like to see that bullish move above the 50-day today.
Most definitely. All right, Ken, thanks so much for that analysis. And thank you for tuning in. The conversation is going to continue tomorrow on IBD Live. If you haven't checked it out yet, you totally should. It's a lot of fun, our daily morning live stream where we're sharing our screens and getting into the nitty gritty about actionable stocks, portfolio management strategies, overall market conditions. We have special guests. We interact with our audience. I mean, what's not to like? And it's totally off the cuff and unscripted, no commercial break. So it's very unique. There's nothing like it. And we have a lot of fun with it, don't we, Ken?
Yes, absolutely. And we were talking about a lot of actionable stocks, just after the open between 6:30 and 7:30 this morning. A lot of stocks breaking out in buy range. None of them in the technology sector, but there's a lot working underneath the surface. It's still a challenging environment. Don't like the way the Nasdaq is trading here, but you still have the Dow and S&P 500 holding up near highs.
All right. Thank you, Ken. And thanks for watching, everyone. We'll see you tomorrow.